Here we go. Good afternoon, everyone. Today is Tuesday, the 11th day of June. It didn't help that beeping sound at all. Today is Tuesday, the 11th day of June, 2024. All right. So the big news for me is that the mid-trend trade is out. I'm going to go into a lot of detail about the mid-trend trade, but before I do, I want to just let you know the mid-trend trade, the one that has the little warning arrow before the main arrow comes out, that works best with range bars. It works with everything, but if you use range bars, it works best with range bars. Okay. Now it does work with everything, and I have the Renko bars down here. You can see it working with Renko bars too. But primarily range bars is what that works best on. You can use range bars on anything. Now I know the title of this, I think the title of this webinar was down here. It was Renko versus range with the TV-Trades mid-trend trade. And so we're going to go into all of that right now, as a matter of fact. Hello Tanya, Casey, DS, Dan. I'm going to go into all of that right now. Now, as far as Renko bars, does everybody understand anything? Do you know anything about Renko bars, or are they brand new to you? Does anybody have any understanding? I mean, the whole reason I was doing the Renko bars is because one of the fellas I published last week's stuff. I think over the weekend I published something on YouTube. Maybe it was Friday, I don't know. But I posted something on YouTube, and one of the fellas that's taken the trial in the past wanted to see what it looked like on Renko bars. So that's why I did this thing on the home page where I showed the Renko bars with the range bars. Now, spoiler alert, range bars are just better. But for people who want to reduce noise, the Renko bars do that. Okay, now the thing that you need to know about Renko bars, well, one, I mean, they do reduce noise, and they're good for they have their uses and their functionality. But if we blow this up, I mean, you can see here that it's pretty clear. When you have a trend on the Renko bar, it's pretty clear you're in a trend. And when it gets choppy, it gets choppy. It's just like anything else that gets choppy. The problem with Renko bars is when it gets choppy. Let's look at a range bar for a second, okay? Now, a range bar, you see the whole range bar from start to finish. You see the whole range bar. You can tell where the top's going to be, where the bottom's going to be. You know that ahead of time. All right. With the Renko bar, you know if it's going to continue in the trend. You know that it's going to continue in the trend, and you can see that it's got to exceed. Before it'll print a bar, before it'll print the next bar here, it's got to exceed the range that you want the bar to be. Okay, so this right here, this is a 3. I said it's a traditional. Let me show you that too. When you look at a Renko bar, there are different types of Renko bars. There's the ATR, the traditional, the percentage. Let's just go with traditional. Okay, that's easiest for me to explain. The box size, the way this works out with the NQ, the way it works out, one box is 1 point. So if you set that to 1 in here, each one of these will be 1 point. I have it set to 3 right now. Okay, I have it set to 3. So each one of these is 12 ticks high. Just like this over here, it's 12 ticks high. Each box over here is 12 ticks high. So to get a new box over here, it's got to exceed 12 ticks. However, and this is where the Renko bars are different, significantly different. To reverse direction with a Renko bar, you see this wick right here? This bar here went down this far. All right, if I click on this, look over here on the side right here. If I click on this bar, the low of that bar is right there at 98.50, right? 98.50 is the low of that bar. However, it did not go far enough to paint a new bar there. And it turned around and painted the bar the other way. So it dropped down here to 98.50. Did not go far enough to paint another bar. But to paint a bar in the other direction, it has to exceed this. It has to exceed that enough to paint a whole other bar. Okay, so I'm you don't see me, but I'm actually raising my hand up here. The high of the bar is right here at 206, but it had to exceed 206 to paint that bar. Okay, it had to exceed that. So when you go short on a Renko bar down here, it can go almost all the way enough to paint another bar, and then turn around, go backwards a full bar length, then backwards another full bar length, and then backwards another full bar length to paint the bar. Okay, so it's like 3 times what you would think the risk is. To paint a bar, it's got to go a full length down to paint another bar. So to go up here this far, it had to go up here to paint that bar. It had to go up this high to paint that bar. So from all the way down here, it had to go all the way up here. So I guess the reason I'm saying this is because when you look at, if you're using a Renko bar, and in here it tells you what the stop is based upon the actual high and low of the bar that you can see. It's not the actual high and low of what triggered in the market. Okay? So it's a little bit confusing. How do you get the audio? I'm not sure. Neil doesn't have audio. Greg says the traditional 5 on the NQ is beautiful today. I mean, yeah, well, the NQ was, it was trending. When it got trending, it was trending really well. So if you use that, then it's fine. If that's what you like to do, that's fine. And you see it's triggering great. When it should trigger, it's triggering just fine. Except when it's, when it's not going in the right direction. But when it is triggering, it's triggering where it should trigger. And you're getting your arrows where they should be. And all of that stuff, right? But you got to understand that the stop with a Renko bar is based upon the actual bar. It's based upon the prior bar's low. Like this stop right here is going to be based upon this low right here, right? The stop is 119,212, all right? So, I'm sorry, 19,212, whatever it is, right there, 19,212. It's the low of this bar, but you know that that wasn't the actual low of that bar, okay? Neil, I don't know. Hang on, let me type in the message. Okay. Audio is fine. Thanks, Ronnie. But the low of this bar wasn't. The low of this bar was probably not right here, right? The low of that bar was down here somewhere. So your stop is going to have to be below the bar before that. Okay, that's where your stop is going to have to be. So the stop that you have in here is going to have to be this plus one more bar is where your stop will have to be. Right, when using Renko bars with TV-Trades. It's just the way they are. This is not representative of what actually happened. This means it did not go down below this level. It actually means it did not go down below that level. But your stop's going to have to be below this bar. It's not going to have to be below that bar. Alright, I just wanted to point that out. That's important that you understand that. Now, the Renko charts are great for reducing noise. Like all of this up here, you don't see all the up and down that happened inside every one of these bars. Every one of these bars is the equivalent of 12 ticks on a range bar, or on any bar. Every one of these bars is the equivalent of 12 ticks. But what you see right here is just 12 ticks from the bottom to the top. You don't know that it could have gone down here another 10 ticks right here. And then up here another 10 ticks right here. Before it finally came down and went up the full 12 and painted the next bar. That's what you don't know about the about the Renko bars. Alright, they look nice and clean, and every bar is going to be at a 45-degree angle of the bar before. The only way to do that is to mathematically structure it so that you have to achieve you have to exceed the bar size. And to have this bar paint here, it has to exceed this bar size right here. So for this long that you had right here, if you went long on the up close of this, it went up just a little bit in that direction, and then it had to go all the way down here just to paint this bar. Just to paint that bar right there, it had to go all the way down here. Okay, then it painted that bar, and then right here it had to do the same thing but in the opposite direction. Okay, and so the Renko bars, when they get choppy like this is right here, when they get choppy like this, there's a lot at risk. Okay, it's not as clear cut as the range bars are. It looks beautiful like this. If you're looking for something that's going to define a trend for you. When you jump into the trend right here, you see this beautiful trend is going on, and you anticipate that it's going to get to this high right here. From down here, you anticipate it's going to get up to this high. That's great, and you can go down into your smaller time frame or your other kind of bar chart and work your way up from right here up to there. Now, the same way that I do all the time in the morning, if you anticipate that it's going to exceed the prior swing high, then your prior swing high is clearly defined with these Renko bars. And if it changes directions and your prior swing low, like right here, we now have lower highs and lower lows. The prior swing low is right here. So if you're getting short, in here somewhere, if you had some reason to get short in here, then you'd be looking for it to exceed that right there, and that's pretty clear. And that's a long way down. When you think about it, that's a long way down. Okay, you hear me good? All right, good, Neil. But so the Renko bars, they got a ton of information in them. There's a ton of information that you can get, but it's just not as much information as you have with the regular range bars that we use all the time. Okay. I wanted to point that out for everybody that uses range bars. I mean, if you like the Renko bars, then by all means, use them. If that's what you like to use, then use that. Just you have to understand the things that you don't see on the chart. It'd be great if you got into a trade right here and just went straight up without going down at all, like that looks in hindsight. But that's not how it works. Okay. But you can see all the stuff is working just fine in here. Well, this one actually gave you a long right here that wasn't going anywhere. But the short right here, now to get that, you had to go down to here and then come back up, exceed that to change directions here. But that's okay. Yeah, I mean, you had right here is like 24 ticks in profit right there. And right here, the short would have been right here at the close of this bar, the open of this bar, high of 206. It's now got a low down here. This bar had a high of 206 and a low of 203 so far. So those are points, right? That's 12 ticks, not yeah, that's 12 ticks. 3 points is 12 ticks. So it's great in that sense. And if you want to use it to, like inverted head and shoulder, there's a head right here, a shoulder here, a shoulder here. The neckline is pretty clearly defined and broken. Using it for trend lines, it's easy to see that. You don't have all these little wicks sticking up and down everywhere. Alright, so Renko bars are good for that kind of thing. But for me, you guys know that this is what I use. When I'm trading, I trade with range bars. And for those of you guys who don't know why, if anybody in here doesn't know why I trade with range bars, I use range bars because it gives you enough information to be proactive with your trades. Okay? So, for instance, now I have this on a 12 range. I wouldn't normally put it on an evenly divisible by 4 number. I'd put it on like an 11 range, something like a 12 minus 1, or a 16 minus 1, or a 20 minus 1, something like that, because then you can be proactive with your orders, right? If you have a short trade, a short trade qualifying at the end of the bar, then you can be proactive with your order. Now, let me slow down for a second. I'm going to say everything here in the first 15 minutes and then not have anything left to say. First of all, does anybody have any questions at this point? Did anybody ask any questions that I haven't answered yet? It looks like there's one question that I didn't get. The issue with the does not support replay for charts. Yeah. Well, any kind of range bar or the Renko bars, any kind of bar like that is not going to support the replay. In that sense, TradingView, I wish TradingView would do that. I wish they would actually create range bars that are truly range bars. They created the range bar when we asked them to about 7 years ago. They didn't have range bars until we asked them to create them, and they fabricated them out of a 1-minute bar. So I wish they would use range bars the way that like DT Pro does, or the way that NinjaTrader does, where you can do the replay with it. But sadly, I've asked several times for them to update that, and they haven't. Alright, before I get too much further, let me say this. If you're in here and you haven't taken a trial with us and you haven't signed up with us and you want to, it's only $25 to get started. Alright. The trial is really free, but it's $25 a week after that. If you like it after a week, you can always switch to the monthly, which is cheaper. If you like it with the monthly, you can always switch to the annual, which is again cheaper. But to get started, it's only 25 bucks. All right, $25 for a week after the 3-day trial. So you get a 3-day trial, and if it's not working out for you in the 3-day trial, well, just let me know and I'll cancel it for you. All right, and yeah, it's really easy to get started, and it's really inexpensive to get started. If you can't make that $25 a week with a single contract, as soon as you start out, then you should probably meet with me and show me why, because it's really not hard to do this stuff. All you have to do, like if you have a chart, I'm just going to take this off the chart. Okay, let's just remove from the chart. Here's your chart. Right, when you sign up for TradingView, you get a blank chart. It's usually an Apple chart. It's usually Apple, and it's usually a daily chart. It's usually a daily Apple chart is what they set as default. It'll be something like this, but this is a Renko. Hang on, let's switch this back to bars. It'll be something like this. Your daily Apple chart. Look at that huge run right there in Apple. I didn't know it had that today. Is there earnings today or something? Anyway, that caught me by surprise. Hang on, there's new questions. You can't test TV trades at all. It's a big problem. Can I do one trade setup and go step by step with TV trades? I can. Can you please show the met right from the 9:30 start till now? What do you want to see from the 9:30 start until now? Anjum. Tell me what symbol you want to see and what time frame you want to see, and I'll go through that. Okay. And Tanya, you can't back test it, but you can always forward test it. All right. You can always go back and see what happened, because once an arrow prints, the arrow is printed. It doesn't go away. Right, and you can always just go back and look at what the charts did. You can look at it bar by bar and say, okay, well, it gave a no. Well, let's just do that. Hang on. Let's go. Anjum, you didn't say what chart you wanted to look at from the beginning, but let's just do a chart from the beginning. Okay. Let's do an ES chart. Now this is Apple that I have right here. And if I just ES or NQ with a 5-minute, okay, that'll be easy. All right, we'll do it with a 5-minute. Wait, before I do that, I want to go back here to the daily on Apple and just throw TV trades on and see what it looks like. Okay, because I don't know. But I'm guessing it's probably going to be pretty good. I don't know if it's going to have caught everything. The last long on TV trades was back here, and your stop would have been down here, so it would have been right at the stop. But that was back there. Anyway, let's go to the 5-minute. You want to look at the ES on a 5-minute from the start. All right. Now, when you're using futures, the reason that I created this bias right here was for futures. All right. That's why I created the bias. It was for futures. And you want to look at it on a 5-minute from the start. Well, there's nothing here on ES today from the start on a 5-minute. And even if I shut the bias off, there's one trade. Oh, wait, I don't have the short arrow showing. Maybe that's why. Okay, so now there's a couple of trades. So here it is from the 5-minute from the start. Is this 9:30? It's right at 9:30. So your very first trade right here at 9:30 was a short from right here. Your stop would have been right up here. The prior bar is where your stop would have been. Your first target. Let's put the targets on too. Okay, let's put the target lines on. Okay. And let's put the mid-trend trades on too. I don't have those on. There we go. We'll probably get some more trades in there because of the mid-trend trades. There we go. Okay, so the first trade from 9:30 was right here. All right, it was a short, and your first target was what was the first target? 34.5. 34.5. So it was right here. It made it down to the first target. The next trade was right here. Your stop on that one would have been right here, and that is not showing a target, but it ran up pretty well. Your mid-trend trade was right here. Your stop on that would have been right about here. Now the mid-trend trade does not does not give you anything in the table. All right, the mid-trend trade, this one and this one, the green and the fuchsia, green and the purple ones, they don't give you anything in the table. Okay, but your mid-trend trade would have been from right here. And this one didn't give you a warning ahead of time. The little black arrows, they don't come in front of every mid-trend trade. But sometimes they do. They'll give you this right here and let you know you got a trade coming up probably on the next bar. But sometimes they don't. It depends how the math comes together. Okay. But so your first trade was right here. That was a good trade. Your second trade was right here. That was a good trade. Your third trade was right here. That was a good trade. Your fourth trade was right here. I don't know when you're moving your stop to break even on this. What I suggest is you take the risk, divide it by 2, and when you get that far into the trade, move your stop to break even. I did actually have something for that. I created something for that, but it's just so much information that it's just a lot. And so the next trade was right here. This long trade right here. That's the 5-minute today, Anjum. That's the 5-minute today on the ES. So you had 1, 2, 3, 4, 5 trades. This one was probably a break even. Every other one was a successful trade. 4 out of 5. Even if you stopped out on this one, your stop out was well, this is your stop right here, right? This is what this line down here is from. It's from right here. It wasn't from back here. Right. The line, and this one right here, Tanya, you can do a replay on this because this is a 5-minute chart, so you can go right to there, and there it is. So the first target was right here, the next target was right there, the next target was right there. So it hit all 3 of the first targets right here. All 3 of those targets that it listed, it hit all 3 of them from this one. Okay, and if we just turn it on and we go bar by bar, let's see, there's the next one right here. Okay, it didn't actually print it. There, it actually printed that one. And so that was a successful trade. And here's the next one. Now that does not print any lines or anything like that. Right, the mid-trend trade, let me pause this right now just so you understand this. The mid-trend trade is not going to print any lines. Alright, you're using the lines from the last trade, the last long trade that you had. You're using the target lines from that last long trade. All the stuff that's in the table is from the last long trade. The main trigger, the trend change trigger. Okay, like this one right here, once it starts going, you have all this information in the table. Any mid-trend trade that happens is going to use this information. Alright, it's not going to change this information, it's going to use that information. Okay. So this is the one that you might have stopped out on if you didn't up your stop to break even right here. The stop would have been right up here on this. Okay, so you didn't up your stop to break even right here. Now I don't know how far down that is from the entry. If we stop it right here, the entry on this one was at 52.75, and right here it dropped down to 50. So you had, what, 8, 9, 10, 11 ticks right there. 11 ticks in profit right there. If you didn't bump your stop to break even after 11 ticks in profit, well, that's how you trade. I don't, whether it's right or wrong is not on me. But so if we just go on a little further, the next mid-trend trade, you didn't get a long trade right here, but you did mid-trend right there. Now the mid-trend trade right here, your stop is going to be down here below the really the pivot that got you into the trade. So your stop's going to be like right down here. Usually the mid-trend trade is going to happen on a pivot. Alright, it's usually going to happen right on a pivot. But it's going to be right below the pivot that got you into the trade. So your entry point on the mid-trend trade is going to be right here at 357. And so far it's run up to 62.50, 5.5 points. And I'm looking to see, I don't see any other questions, but this is what it looked like today. Right, the 5-minute on the ES. Okay. Now, remember the still going and going here. Alright, and there it is at the end. So this is current right now. Alright, we're not in replay mode anymore. This is current right here. So the bias level here was really created for futures. Alright, that is to keep you out of situations like this where it chops back and forth a little bit right here. Essentially what that's doing, this 233 is the equivalent of having a 233 simple moving average on your chart. If I put a simple moving average here of a 233. Now remember, the reason I have it the way that I have it, the reason I'm doing it the way that I'm doing it with this stuff, without having any indicators on there for you, is because we are our own worst enemies when it comes to indicators. Right? So what this is saying, when I turn the bias level on, it's going to say when you're below this, only give shorts, and when you're above it, only give longs. So all these long trades, this long trade, this long trade, and this long trade, when I turn the bias level on, they're going to go away, and you're only going to have these short trades. Okay? If I turn that on, that's what's going to happen. In a minute. There it goes. Okay, so all those went away, and all you're left with are the short trades because you're below this. So right now over here, if you got long trades, they would trigger. If you got short trades, they would not show. All right, that's what that's there for. In situations where the markets are flat and choppy, it's to eliminate you getting chopped out both ways. All right, and you do not want to have anything. I don't want you to have anything on your charts, because these things right here that you see on your charts are the things that make you second guess everything. They're the things that make you do things, but they're also the things that make you not do things. And having that decision-making ability, it's a blessing and a curse. So if you just have the decision to take the trade when it says to take the trade, if you just trust what it says and do what it says, then that's going to work out for you. If you start to integrate all your own stuff, well, then you're integrating all your own stuff, and I don't know anything about your own stuff. But but for this, I mean, Andrew, you wanted to just go through. Hang on, let me scroll up. So when using TV trades, it sounds like your stop and profit targets are different from when you use. Yeah, they are, Jenny. They're different from the stuff that we do in the morning. I mean, you have your stop in here. Your stop is right there for you. And then when you're using the mid-trend trade, your stop is it's not given to you up here because this is for these trades here that trigger on the trend change. The mid-trend trade stops are going to be just above the bar that got you into the trade. The pivot that got you into the trade. It's usually going to, the actual mid-trend trade bar is usually going to be the pivot bar. It's going to be the pivot bar or very close to the pivot bar. If it's going to work out, it's going to be the pivot bar or very close to the pivot bar. Okay, and so you would put your stop just beyond there for the mid-trend trade. For the other trades, it tells you exactly where to put your stop. Right? In the morning when we're trading on the NQ or the ES particularly in the morning, we're using a 7-tick range chart, and we use a 10-tick stop. Every chart, every trade, every time. In here, the stop is based upon, without using the mid-trend trades. All right, if I shut the mid-trend trades off, without using mid-trend trades, the stop is based upon the price action. The prior bar is what it is. Okay, so like right here, your entry point would have been right here. It says right here what your entry point would be. Let's go back there, and right here. Hang on, here it is. Actually, let's go back a little bit more. We'll go back to where it actually triggered. Okay. Let's go back to right here. So right now you don't have your last thing in the table when it populates was a long trade from way back here. Right, and that long trade hit that target, it hit that target, and it got halfway to that target before everything turned around. So when it started going down here, we'll just go one bar at a time right here. Okay, so here it's starting to turn down. There it is. All right, so it just changed the table around. All right, it just changed everything in the table around. Now we'll go one more bar. Okay, so here in the table, it says what your stop is, right? It says how big your stop is, how many points your stop is. It says what your stop is. It says where your entry should be. 50.5, entry right there, 50.5. Stop is going to be up here at the top of this bar, right here at 57.50. Right, stop right there, 57.5. And it gives you your targets. All right, it prints out your targets for you. All right, now what it's going to do as it goes forward here for 5 bars, it's going to keep these targets. It's going to maintain those targets. Okay. But hang on, there's a couple more questions coming in, but let me just go forward a little bit more and you'll see as it goes forward in here. Now you just had a huge gain on this, so somewhere in here you're going to start taking profit, right? Now your entry point was right here, your stop was up here, and your first target was down here at 53.50. 53.50 was target 1, right? 53.50 was right here, target 1, that was right there. The second target was here, your third target's down here. And if you put more targets on, you can put more targets on if you want to. You just go in here and add targets, go out to 5 targets, and once it populates up here, there it is. So 29 is the next one, and then 5306. Now, I don't know how far down we went. All right, so this is 29, and the next one down is going to be 5306. To be down there even further. Now, if we go forward some more bar by bar, you can see that it started to pull back. All right, so somewhere in here you're going to trail your stop. You're going to start taking profit. How you manage that part of it is up to you. I suppose I can go into something about that, but you can see right here it's looking like it's going to change direction. But remember, we have the bias on right now, so the bias is still looking for just short trades right now. Okay, until it really changes directions, it's just looking for short trades right here. If we didn't have the bias on, remember when we went through this bar by bar a few minutes ago, we didn't have the bias on, and I think it actually flipped to long in here. Yeah, right there, it flipped to a long, which still worked out. And if we put the mid-trend trade on, I think we have one of those coming up here too. Right? But that was that. How do you not recommend doing these trades during the morning time? I recommend doing one or the other, Hal. Don't try to do both. Alright, because there are going to be times where one of them is saying to go long and one of them is saying to go short. Or there's going to be times where you're in a no trade zone on one and you have a clear arrow on the other one. So I would say choose one and do one at a time, right? And Jenny, you say you don't want to take a mid-trend trade versus a blue and red arrows. When do you want to take a mid-trend trade versus blue? Is it a lower probability, or what is it? What is the intent? The whole idea behind the mid-trend trade, without the mid-trend trade, all right, let's just take that off. Without the mid-trend trade, and let's disable the bias level. You have a long time between trades. All right, you had one trade here at 3:10 in the morning, which I might have been up and taken. I actually think I did take that. And you have another trade here at 9:30, 6 hours later. All right. Right here you have one long trade. Now I don't know how this ended up. If you go to the end, if you just shut this off, I don't know if this was the last long trade of the morning. Maybe you take the mid-trend trades off. We had one long trade there, we had one short trade here, and then we didn't get any more trades. So the mid-trend trades give you opportunity, give you a lot more opportunity to place trades. All right, for people who, yes, Dwayne, it is being recorded. For people who can only come and sit for an hour, maybe, in a session. They can't sit for 4 hours and get 3 trades in 4 hours. There was a lot of demand for the mid-trend trade. Now, remember, I created this for equities more than futures. It works great with everything, but I created it for equities more than futures. And with equities, you're not going to be day trading like this. You can, but you're not going to be day trading like this. So let me go back. Jenny, I think I answered that. John, you said when on a shorter term chart, the background color seems to get blank vertical lines on it quite often. Is it essential to have the background color, or can you just disable it? You don't have to have the background color. You can disable it if you want. It's there to kind of guide you as far as the trades go. If you have a bar color change when the background color doesn't change, that's usually going to happen around a mid-trend trade. All right, there's little nuances that you probably don't know about, John. Let me read that question out loud again, okay? Because what he's talking about is when you go to a smaller time frame, and I see this all the time in the morning session, particularly with the stuff that we do in the morning. I see it all the time, and I may, if I minimize this like this right here, you see how that is blank right there? That happens all the time in the morning, particularly with the smaller time frames. It happens all the time. You don't really need to have the bars, but it's not going to print an arrow there either. It's not going to print anything. You're lucky to have a bar there is what they're basically saying. But if you get something like that, just flip to like a 5 minute and back to the 1 minute, and it'll fill it in for you. That's what I do. All right, just flip off the time frame and back to the time frame. Yeah, and I'll show you all that too, Daryl, in just a sec. Okay, there's a demand to see the ES on a smaller time frame. So here's the ES on the 4-tick range. Okay, let me just make sure I answered all those questions so far. And Jim, I can, if you want to go through the NQ, we can go through the NQ on a 5-minute too. You know, it's it's the same stuff, just on the NQ. It's going to be, you know, a lot more trades probably on the NQ than on the ES. But that is all of that. Now let me just jump in here and see. Hey Kathy, I see you in there. All right. Does anybody have any questions about this? I know that there's some demand to see the ES on a 4 range. This is what the ES looks like on a 5-minute. Let's just look at the NQ on a 5-minute too, because that was one of the things that Andrew asked for. Now I have no idea what this looks like, but I'm just going to throw it on here. The NQ on a 5-minute. Today's action starting right here at 9:30, and without anything else on, without the bias on or anything like that, you had a long trade right here that worked out wonderfully, a short trade right here that would have stopped you out. The stop on this would have been 79.50 was your entry. Well, this is it right here. Saying what your stop would have been right here. Your stop would have been 16.75 points. So that's points, right? That's points. It would have been a huge stop right there. But then again, this gain right here would have been from 60 all the way up to 37. So it would have been 77 points right there compared to a 16 point. And the stop on this one right here, if we go back and look, this is on a 5-minute, so I can do the replay on this. If I do the replay and we put it right here, see the stop is going to be minimal. So the risk reward on this, if I put the risk reward on, so your stop is 10 points, is what it says. All right, 10 points, which is 40 ticks, which isn't minimal really, but in the scheme of things, it's not very big. It's going to be right down to here is what your stop is going to be. Your entry point here down to the bottom of this prior bar is where your stop's going to be. All right. Now, if we throw the risk reward on this, you can see that the first target was right here, so it's not going to have a great risk reward, but the next target was up there. And for those of you guys who don't know, every trade gets a risk reward if you want it. See, the risk reward was 0.65. You usually want that to be greater than 1. All right, greater than 1 is what you usually want with that. If you go back a little bit further, yeah, the way these came together this morning, it just doesn't look like they gave great risk rewards to begin with. But let's see, this one might be a little better. Yeah, this one, the risk reward is 2.9 because your stop is going to be right here, and your first target is up here. Okay. So every trade gets its own risk reward, and every trade, well, every one of these trades, again, the mid-trend trades don't do anything to what's in the table, right, in the target view table. It doesn't change anything in the table. You use all that information with the mid-trend trade to manage a trade. Okay. Now, I was going through this. I was going to go through minute by minute to look at something. I forgot what it was exactly, but hang on. Let me go back here into the question box and see. The 4 or 7 tick range, yes, we're going to get right to that. This is the one that would have stopped out right here, I think, right? Yeah, right there it would have stopped you out. But then you get a great move right here, and then it turns around and it gives you another move right here. Now, the targets that it's displaying are, yeah, they're from this one right here. Your first target is right here, your second there, third, fourth, your fifth target's up here. I don't know if it actually hit the fifth target, but nope, it pulled all the way back here. So somewhere in there you're going to be taking profit because that's a long way up right there, point-wise. You're talking 100 points right there. And this is on a 5-minute chart. So Daryl, I'm going to get to your smaller time frame here in just a minute. Right now in this ES trade, entering at the close of the bar. There's a current ES trade right now, Ronnie. Right, I think I made my point with this, so let's just shut that off and we'll go look at that right now. The ES trade right now, you would have entered right here on the up close, yeah, on the 4-tick range. So we'll kill 2 birds with 1 stone right here. Hang on, let me take a drink. Okay. Again, if you guys are in here and you haven't gotten started with us, just go here to the home page at TargetViewTrades, targetviewtrades.com. You just go here and it's right over here. It should be. Here it is. Right over here, the free trial. Take the free trial. You can do the one that's $25 a week and start out with $25 a week. The trial really is free for 3 days. And if after 3 days you want to continue, get another week out of it, go ahead. If you want to upgrade to the monthly, that's fine too. if you want to grade to the annual, this is 10% cheaper than that, and this is just about 10% cheaper than that. It's a little less than 10% cheaper than that, but pretty close. 997 seems like a good number. Anyway, I want to show you how to take the trial. Now, back in here. Okay, so on this one right here, Ronnie, yeah, you would have started right there. You would have taken that trade right there, and your stop would have had to go down here. Okay, it's got all the information right here for you. That's another thing. If you, per request, I created the ability to move this target box around, so you can move it, left, right, and center. That's going to move it all the way over here to the left, I think, on the bottom. And you can move it up onto the top if you want. And you can move it to the right top. It's going to move it all the way over here. So you can move that box around into 9 different places. All right, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 different places. They limit it, but I gave everything that they gave. All right. How do you know if the 4-tick range versus 7-tick range in the morning wasn't working well? Hang on. If 4-tick range versus 7-tick range, 7-tick range wasn't working well for me at 7:30 a.m. today on the ES, but then you looked at the 4-tick range and it would have been much better. But 4-tick range is super fast. It's not that fast. I mean, right at the open it's fast, but yeah, the reason we went to the 7-tick range, thanks Kathy, the reason we went to the 7-tick range was because it was, the 4-tick was too fast. But that was, back when Russia first started to invade Ukraine and the markets got crazy. That's why we switched from the 4 to the 7. We used to trade for 10 years. The spreadsheet, this spreadsheet right up here, that goes back to January 2nd of 2013 with our daily results. For 10 years, we traded on that 4-tick range on the ES. This makes it just easier, and it keeps the risk smaller. But again, Daryl, what I want to point out, when you're going to the smaller time frames on the 4-tick range or the 7-tick range, whatever range it is, whatever chart it is, if you go into a smaller time frame with futures, you want to turn on the bias level, okay? Because with futures, there's a lot of times where, like right in here, it might have chopped back and forth a little bit. I mean, granted, this was two stop outs right in a row here. I don't believe that should not have been. There's something up with that because it was it wasn't a down close, but it wasn't an up close either. Usually, I'm not going to have a bar trigger an arrow unless it's an up close, but the close was not, I guess, mathematically, the close was not less than the open. That's what it's looking at. That's the math that it's doing. It's not less than the open. So it's greater than or equal to the open. That's why it still triggered one right there. But if you put the bias on in here, it's going to get rid of the short trades that probably triggered in here. You probably had some short trades peppered in here, like that one right there. That one over there, that one over there, this one right here. Now, not that the short trades are bad. Most of the short trades went enough. You gotta have risk management strategy. You gotta move your stop to break even quickly and all that. Again, with the mid-trend trades, your stop, usually the mid-trend trades are going to be on a pivot point. All right, they're usually going to be right on a pivot point, and your stop is usually going to be just beyond the bar that got you into the trade. All right, just beyond the bar that got you into the trade, and that's going to keep you going, right? That's going to minimize your stop. If you're on a 4-tick range, like this is a 4 range right now, so your stop should be 4 or 6 ticks, something like that on pretty much all these mid-trend trades. 4 to 6 ticks. And you can bump your stop to break even after you get like, 4 ticks in profit. You bump that stop to break even, and then you just let it ride. The targets are not going to be generated again from the mid-trend trades. The targets will be generated from these trades back here. All right, so if we go all the way right here right now, the target generated from this is going to be up here somewhere. But the targets are already up here, 76.5, 77, and 80.5. So 76.5 was the first one, 77 was the next one, and 80.5 is the next target. It's all the way up here. If I put the target lines on, you'll see them right now. All right, if I put those target lines on there, you'll see them right now. There, and up here. And if we get a mid-trend trade in here, and we might get one here, it might come up soon. If we get a mid-trend trade in here, then you'll have these target lines to work with again, and you have this one up here still. And if you put it out to 5 targets, you'll have 2 more targets beyond that. Okay. Alright, it's 3:44. I have 16 minutes left. Daryl, I was going through the smaller time frame with you. You wanted to go through that, and John, in the morning, you can start out with whatever one's working for you. I would say start out with the bias on. All right, show the mid-trend trades, put the bias on. So the market is going to have to be doing something one way or another to get you going in one direction or the other. And it's like this morning. The first trade was right here this morning, right? This is on ES4 tick range. Okay, this is a pre-market, and that would have been an okay trade. The first trade was right here. This gave you two warning arrows, notice arrows. I renamed them notice arrows. Also, for the people who are in here, you can set alerts on all these things. Okay, like I have alerts going off over here constantly. These are what the alerts say. Right now, you can have them here. I have them going off on my phone constantly too. You can have the alerts sent to your phone. If you go right here, you go to alert like this, and in here, if you select TV-Trades, you can have a mid-trend trade buy. Advanced notice, that's going to be these little black arrows. A sell advanced notice, black arrows going down would be the advanced notice for that. The black arrows going up would be the advanced notice for that. The buy alert is going to be when you get, not the red, but the blue arrows that are going up is when you get a buy alert, and a sell alert is when you get one of these red arrows. The mid-trend trade sell alert is one of these fuchsia arrows. You can change the color of that if you want to. The mid-trend trade buy alert is going to be when you get one of the green arrows in the middle. The sell advanced notice and the buy advanced notice. That's going to happen when you get a bar like this one. And that, John, goes back to your color question from earlier. If you get a blue bar on a red background, it's going to give you an advanced notice on that. It's going to say, okay, there's going to be a trade coming soon. There's going to be a long trade coming soon, is what it'll say. If you have the buy advanced notice turned on, right here, this bar would have given you a long trade coming soon notice. All right, and the sell advanced notice, if you have a red bar on a blue background, like this one right here, you would have gotten a bar notice. You would have gotten a notice ahead of time that this trade was coming. And the whole reason I do that is, well, it's good for futures too, but if you were trading stocks, let's say you're trading equities, and you're looking at, like, let's say you're trading something that's pretty active like NVDA, but you're not really paying attention to it, and you want to know when a trade's coming up on NVIDIA, an opportunity to go long or an opportunity to, well, I was going to say go short if you trade NVIDIA, but most people aren't doing that right now. But an opportunity to get in and go long, you want to know ahead of time so you can sit down at your desk and get your, whatever it is, your TD Ameritrade or whatever it is, your Schwab account up, get the trade ready to go, and be ready to go on the next bar. That's what that's for. So if you have it on like a 5-minute, like Anjum had me looking at the 5-minute earlier, when you're looking at the 5-minute, you would get notified 5 minutes ahead of time that the next bar could be the trigger. So then you have to wait for that bar to close to actually get the trigger. So you have 10 minutes to get your stuff together, get your order ready to go. And how come the bias is not showing on the ES right now? I don't know, Ronnie. I'm not looking at the ES bias right now. I think I have it turned on right here. I'm not sure, but the bias does not have a line associated with it. Okay. There are no lines associated with any of these indicators, any of anything. There's only one thing. It's a tool. It's not even an indicator. It's a tool to let you know when you have trade opportunities. I don't want to have lines on the chart. I don't want to have any lines or any indicators that's going to make you second guess any decision you're going to make. All right? You see the arrow. You say, okay, I trust it. I'm taking it. I trust it. I'm taking it. It tells me exactly what to do. I know what to do. I know when I get one of these right here, I get one of these black arrows, I get an alert that says, hey, this is a possible short coming up on the next bar. I get ready for the trade. It gives me the short. I take the trade. End of story. The stop's going to be a little bit above that bar. The trigger bar or the pivot is where the stop's going to be on a mid-trend trade. On one of these trades at the trend change, on one of these trades, it tells you exactly where your stop needs to be, but I'll tell you it's going to be the high or the low of the bar before the trigger is what it's going to be. Okay. Then when trend changes, change the bias. You don't have to change the bias at all. You just leave the bias on or leave it off. It's up to you. How? Yeah, your first question, like the bias is right here, right? And all that's telling you is it's only going to show long trades above the 233 simple moving average. It's only going to show short trades below the 233 simple moving average. That's all it's going to do. Right? There's nothing in between that it's going to show. It's so that you don't have to make any decisions. That is funny. So you don't have to make any decisions. And you know, when you start making those decisions on your own, not you personally, Hal, but you know, when we as traders start having those okay, Kathy, when we as traders start having to make those decisions on our own, that's where things start to go downhill, right? Because we can't make concrete decisions every single time like we should with this kind of thing. But yeah, but Ronnie, the bias is not on here because you should not have any lines on the chart. Okay, you should not have any lines on the chart at all. Alright. Okay, I'm going back down in the questions. I want to make sure I answered all the questions so far. John, my timer on top of this session shows only 7 minutes left. I used to think that mattered, John. It doesn't. That's just from when I actually clicked the start broadcast button. Because I guess I set it for an hour, and it automatically counts down that whole hour. So it's all right. I apparently started the broadcast in 59 minutes ago right now. So don't worry about that timer. Okay. Can I show, hang on. Can I show MTT on gold? I sure can. Is this system solely based on the 233? Is the system solely based on the 233? The bias? Nothing is based on the 233. This you can make whatever. I mean, I know I have, like, Renko uses a 50 in here. For his bias, he uses a 50. Okay? And that narrows down his trades the way he wants them. You know, he likes really short-term trades. But by default, I just put it on the 233. There's nothing magic about the 233. Alright? It's a fib number. It's kind of a middle-of-the-road fib number. There's nothing magic about it. You can leave it there. You can use that. Or you can change it to whatever you want. Okay, Casey? And that's just the bias. Right? The gold. Let's look at gold. GC. Gold features. What contract are we in gold? Are we in July? I think we're in July, right? The N. I'm guessing that's not what we're in. What contract are we in gold? Q. Okay, thank you. Thank you. No pun intended. We're in the Q contract. Alright. So this is what it looks like on gold. With a 4 range. You didn't say what size you wanted to look at, Guido. But I'm happy to look at anything you want. You know, this works on everything, guys. You're not going to be able to give me a chart that this doesn't work on. Right? So this is what it looks like on gold. Alright, here's your mid-trend trades. Is this from today? I think this is all today. Yeah, this is all today. Your mid-trend trades right here on gold. Okay. Every one of those was a winning trade. Every one. I don't see a losing trade at all in there with the mid-trend trades. This one. And this one. Oh, and there's one over here too. Okay, not every trade is going to work out perfectly, but you know, most of them are going to work out pretty well. Okay. You want to see a 15 range? Okay, let's look at it on a 15 range. So you're going to have fewer mid-trend trades with a 15 range. I don't know if we're on today. This is today, right? Okay. Hang on, let me scrunch this down so you can see a little more. So this was the beginning of today. This was the first mid-trend trade today. It gave a couple of notices here, but then it didn't actually give the trade. It gave one right here. This is what, I guess it didn't have a lot of long trades. Had one mid-trend trade right here on a 15 range. It ran about, well, all the way up here. And one other mid-trend trade right here that it's still running on right now. So on this one, Guido, on this one right here, you'd be using the targets from back here, right? This is what these lines are from. These target lines, they're from this bar right here. This trigger is what those are from. Okay. And how did I say the bias is on with the bias right now? This is with the bias on, okay? So if you shut the bias off, then you probably have some more trades. So you got mid-trend trades going in the other direction now. There's one there. Well, let's start at the beginning. Okay, we're starting at the beginning right here. This first one would not have worked out. Your stop on this would be right up here. It would have stopped you out. Now, a lot of times when you get a mid-trend trade, one that stops out, the next one, if you get another one in the same direction right after that, next one is going to work out. And that's the case right here. But you had this one here that worked out, this one here that worked out, this one here that's currently working out. So on the 15 range, there's not a lot more there, but that's what it looks like with the bias off, right? And with the bias on, it takes out a couple of trades. Ronnie asks, are there certain times when I recommend we don't take the arrow, like in a congested market? Well, you don't really know it's congested until it's actually triggered, right? You know, in a congested market, you might get something, but if you have the bias on, you know, it's going to get rid of one side of that usually. If you ever get two trades like this one and this one going in opposite directions like that, and you have the bias on and it's still giving you that, you know right there that whatever the bias is completely flat right here. All right. So you probably want to wait until you get out of that kind of a range, until you break out of like highs above that, and lows below this right here. Like lows below this and highs above this. You want to wait until you get out of that little bit of a range, which it did right here, and then it gave you this mid-trend trade right here. I mean, not that this one, you know, you could have taken this. This is the gold. You could have taken this, and it's a 15 range. So it had an entry point here at 23.1, and it ran up to 24.2. So you had 11 ticks in profit on that before it turned down. This one right here had the entry point right here at 19.7, and it dropped down to 18.5. So you had 12 ticks in profit right there before it turned up. So neither one of those was a bad trade, right? But when it goes back and forth quickly like that, you probably want to wait until it actually starts a trend. And you know, when you're looking at it like this, one bar at a time, this is how you're looking at it. Okay, so you got that one there that went and it didn't put in a higher swing. And then you get this one here that's going in the opposite direction, knowing that you have the bias on. It's going in the opposite direction. So you take that if you want to, and that gives you just that little bit. So here you stop and go to break even, probably maybe lock in a couple of ticks. Here you stop and go to break even, maybe lock in a couple of ticks. Didn't give you the swing high, didn't give you a new swing low. Back here's your swing low. Now, I'm saying this to you guys because you guys, you know, the people who were asking this question, Ronnie, I know you guys are traders, all right? But for people who are brand new, who just want to look at an equity on this, you know, if you just want to look at like NVDA, right? If you just want to look at a stock on this, and you're not going to look at that on a 4 range or a 15 range, I do still recommend you use range bars for equities. Oh, they had the stock split. I do recommend you, I didn't realize they had done that, but I do recommend you still use range bars for equities, but the range bar is going to be proportional to the size, the price of the bar. All right, so each tick with a range bar on a stock is a penny. All right, so you're at $120 stock. I would recommend probably a 50 range, maybe, so every bar is 50 cents. Okay, every bar is 50 cents in here this way, and you know, and you can, in here we have bias level on, we have everything going on in here. I don't really recommend a bias level for equities, all right, because with equities, you know, you're going to get in a trade and you're not looking, I don't actually even recommend short trades for equities. So you just get rid of that and just go with long trades. Right? So you're taking the long trades when you get them. You get a long trade right here, you stop on that. Stop on this is going to be down here. Alright, so you would have stopped out, but your stop would have been like 75 cents. And so you would have stopped out there. You would have gotten it back on that one. This one here, this looks like kind of a break even, or you'd still be in it. Alright, still continued up over here. But I totally didn't realize they had done their stock split. But you're staying in the trades too long. Well, yeah, you don't, you know, when you get in there, you know, a flat range on or off filter. Well, that's kind of what the bias is for, John, is to help you identify when you're in flat periods. If you have the bias on and you have trades that go back to back, let's put this back on. But we're looking at gold, right? GCQ. You know, if you go to GC1 exclamation point, it's going to put it on the leading contract. I don't know if you guys know that, but it's going to put it on the leading contract. But we're looking at a 15 range. This is what it looks like on a 50 range. The gold. Now we're looking at only longs right here. I only had longs turned on. So it killed it with the longs today. Let me go back to the 15 range that you were interested in. Let me put the short trades on there too. Okay. So if you have back-to-back things like this, and you have the bias on, and you still have back-to-back things like that, you know you're in a flat market. So you probably want to wait until it starts to trend. Okay. Now, as I pointed out, both of those were still successful trades. They're still good enough trades to get you $100 a contract. Each one. Alright, Tanya. I'm sorry, Tanya, that they don't have bar replay with anything but time-based bars. That's the limitation of TradingView. I wish they did do it for range bars, but they don't. I know that's a thing for you. Alright. Wow, guys, it's 4:01. Where did the time go? Alright, I want to make sure I answer all the questions. Did I answer all of your questions? Everybody? Everyone? Before I wrap it up, if you haven't taken the free trial, again, go here to targetviewtrades.com. Go to targetviewtrades.com. Scroll down to right here. Take the free trial right here. All right. It really is a free trial. It's $25 a week after you finish up the 3 days if you want, or you can do the monthly if you want. Either way, it's dirt cheap compared to what you can and should be making in your first week with this. Like right here, since we've been talking, actually this isn't gold, but since we've been talking on the ES, I'm pretty sure we had a winning trade on the ES. I would have paid for your first month. Right there. Would have paid for your first month right there. And you don't really have to think a whole lot. It gives you the blue arrow. You go. Makes sense? Alright. If you guys have more questions, I'll stay a little bit longer. But we've hit the 1 hour mark, and I am happy to stay and answer questions if you guys have them. But if you don't, then we'll wrap it up. Okay? And I'll put the recording out in the Telegram channel. If you don't know about the Telegram channel, we have a Telegram channel. It's in there somewhere. When you sign up for the free trial, you get all that information. I don't have the Telegram channel information handy right now. But we have Telegram, and I did have Facebook, but they shut me down today for some reason. I have to figure out what that is. And we have YouTube. You can catch me out on YouTube all the time, too. This will be out on YouTube in a little while. Alright. It looks like you guys are starting to drop off, so no more questions are coming in. I'm going to wrap it up. Thank you all for coming. If you have any questions, email support@targetviewtrades.com. Support@targetviewtrades.com. Pretty much everybody that's left in here right now, you have my phone number. You can also text me. Okay? You all have my number. You can text me at my number, and I will get back to you. Alright? Thank you all for coming and being part of this today.